Hi everybody, welcome back to the channel. Today I'm going to be discussing the dividend stocks that I'm buying in 2023. Each year I create an investment plan to focus my attention on the dividend investments I want to make for the year. I find that having a defined plan ahead of time allows me to focus my attention on what I need to buy instead of getting sidetracked with the newest thing on social media. Since I'm striving for fire with dividends, my goal is to live off dividends in the next 9 years. In an article on my website, I noted that your timeline should dictate your yield and dividend growth decisions. And based on that, my 2023 investment plan is to focus building on my allocation to exchange-traded funds and closed-end funds instead of individual companies, with the goal of making exchange-traded funds and closed-end funds to be 50% of my portfolio. Based on my short timeline, I will be concentrating on higher yielding investments and I'm going to be investing a set amount of money each week to hit my goals. So in 2023, I have decided to invest in a total of 7 different funds, which I'll be discussing next. The first one is the JP Morgan Equity Premium Income ETF, better known as JEPI. JEPI has a current dividend yield of 10.50% and an annual payout of $5.77, which is variable depending on the results of the fund. The investment objectives is to create a defensive equity portfolio of S&P 500 stocks with a bottoms-up fundamental research process for stock selection. In addition to this portfolio, they're going to have a disciplined options overlay by writing out-of-the-money S&P 500 index call options to generate additional monthly income. The current holdings are top quality names from the S&P 500, and the diversification across the sectors is quite significant. The next one is the BlackRock Enhanced Equity Dividend Trust Closed-End Fund with a current dividend yield of 8.08% and a 5-year dividend growth rate of 14.64%. The objective of this fund is to invest in common stocks that pay dividends and have the potential for capital appreciation. They're also going to be utilizing an option writing strategy to enhance the distributions paid. This is a monthly payer. The holdings are quite diverse as well, with financials and healthcare being the primary sectors at this time. But looking at the individual holdings, you can see top quality companies across the board. The next one for this year is the Amplify CWP Enhanced Dividend Income ETF, better known as DIVO. DIVO currently has a yield of 4.71% with a 5-year growth rate of 4.99%. This particular fund is actively managed and it invests in high quality large cap companies with a history of dividend growth, and they utilize a tactical covered call strategy on individual stocks. This is quite a concentrated portfolio. As of right now, they have 38 total holdings, and the diversification across the sectors is excellent, and the holdings are top quality names that most people would enjoy holding in their portfolio. Next up is the Reeves Utility Income Fund Closed-End Fund. Its ticker is UTG. It has a current yield of 8.26%. and a 5-year dividend growth rate of 3.18%. The investment objectives is that they focus on utilities and other essential infrastructure related companies, and they enhance their yield through the use of leverage. As shown in the name of the fund, it is primarily focused on utilities, but it also has other industries, including communication services, real estate, industrials, and energy. Next up is the BlackRock Science and Technology Trust, ticker BST, current yield of 8.68%, and a 5-year dividend growth rate of 15.49%. The investment objectives is equity securities and science and technology companies of any market cap, and with the potential to generate current income from the dividend yields, as well as the cyclical nature of science and technology stocks. In addition to investing in these high science and technology stocks, they do offer a strategy of writing covered call options on a portion of the common stocks in order to enhance the yield. The current holdings is a who's who's of technology companies, including Microsoft, Apple, NVIDIA, ASML, MasterCard, and Broadcom, as well as many others. And they do have a diversification across sectors. Even though it is a science and technology focused fund, it does have holdings in other industries as well for proper diversification. Next up is the Vanguard International High Dividend Yield Index Fund, ticker VYMI. Has a current yield of 4.52% and a 5-year dividend growth rate of 4.71%. The goal of this fund is to track the performance of the FTSE All World ex-US High Dividend Yield Index, and it focuses on companies located in developed and emerging markets outside of the United States that are forecast to have an above average dividend yield. The sector breakdown, again, is quite diverse, but financials does have the majority of the holdings. But if you're looking at the individual holdings, these are top quality names across the globe, and it provides proper diversification from a US-centric portfolio. And last but not least, and what should be in most dividend investors' portfolio, is the Schwab US Dividend Equity ETF, ticker SCHD. The current yield of 3.56% with a 5-year dividend growth rate of 13.92 is the perfect balance between current income and future growth. The investment objectives of SCHD is to closely track the total returns of the Dow Jones US Dividend 100 Index by investing in stocks selected for fundamental strength relative to their peers based on financial ratios. The sector breakdown is quite diverse, and it holds a lot of different sectors. The one that it does not hold is real estate, but the top 10 holdings are top quality dividend companies that any dividend investor should be happy to own, including Verizon, Texas Instruments, Cisco, Pepsi, Home Depot, Coke, Amgen, amongst others. So those are the 7 funds I am investing in 2023. Next, I'm going to show you the breakdown of how much money is going to each of the individual funds. With JEPI getting 10% of all new money, BDJ at 15%, Devo 20%, UTG 10%, BST at 5%, VYMI at 15%, and SCHD 25% of all new money goes into these funds. So here are the 7 that I've decided to invest in for 2023. At the end of the year, I will be reevaluating my decisions for 2024, but for now, I am focused on building up these positions. Thank you for watching. Hopefully you enjoyed this breakdown of what I'm buying for 2023. I highly recommend everyone go into the year with an investment plan in place to be able to focus your investments on the most quality companies you can find. Please subscribe and like if you enjoyed this video. And please share with your friends. Also, find me on social media. I'm on Twitter and Threads, as well as visit our website at dividendstockpile.com for more dividend-related content. Thank you so much. We'll see you in the next video.